Let's go, guys. So, guys, this is like we're still in the first 30 minutes of the opening range. So, basically, what we have currently here, this is the NASDAQ 1 minute chart. So, here you have 930 is opening. So, we're gonna put 930 right there. And then, what I'm gonna do right now is bring in all the fib levels that we need. I'm gonna bring them out. Why am I doing this? Because I want to show you the regular trading hours, opening range, opening range gap, right? That's what I want to show you. I'm going to show you that. So basically, we're going to take this and we're going to check where did we close and where did we open. So I think we closed up there, right? We closed there, all right? So I'm just going to measure the gap. Just gonna show you the gap, and then I'm gonna show you everything that is outlined, because this is exactly how I will outline any trade on any other day, right? So I'm marking this right there. That's the opening, right? Okay, I think there's a button here we can use to sort of deal with the coordinates and stuff. Yeah, these ones, I think, let's see. Okay, let's move this there and see what we're doing. Okay, yeah, it's moving nice. So what you see there, marked with the fib, is the opening range, right? The regular hours opening range gap. So that's the gap right there. That's the gap right there. That's the gap. Hmm. So we closed, you see, we closed here last week. And then, as you can see, we opened way lower. Yeah, we opened right there, here, way lower. So that's that. Okay. Okay. So what can we see currently is that we are failing to go higher into the opening range gap, because we know that by 10 o'clock, most of the time, at least we have the half of it, right? Half of the opening range gap. There's over 70% chance. As taught to us by ICT and practice, if you really practice what you learn. So here, here at 7, the market just opens and goes there, leaves a little swing here and goes down like that. So as it's going down like this is your initial buy side, this one, right? This is your initial buy side, this buy side liquidity, right, guys? On the top side, this one. Let me make that black too. Let's go for the text to make it a bit blacker. There we go. Initial buy side there, right? And then down here, you have what? Initial sell side. It's already written, as you see. Just gonna make it a little bit darker. There we go. So just from this and not going into more details, let's do this. Let's see something. What we do on the left at school, we'll do on the right, right? So basically that means if we take liquidity on the upside like this, on this range that I've marked currently here, then we can anticipate the low end of it, right? Because of we've ran above the initial buy side right there. So you can anticipate that coming down into this, right? On a normal basis, if the market probably was somewhere here and then it was 930, any move to the upside for me was going to be a Judas swing. Like this move was a Judas swing. Let's say this move here is a Judas swing. meaning a false move, right? So looking at this, it's a Monday. As you can see, it's not really running like that. It's just moving, but it's not running. See, these candlesticks here, they're showing that there's no that juice. We don't have that juice, right? So this would be the opening range high, and then whatever low we get is gonna be the opening range low, right? And the speed that we use entering this initial buy side here is very important. The speed. On some other days, we're gonna have London buy side being right here. And then we take out initial buy side and London buy side, and then we fall like the way it's moving right now, right? And then also I'm gonna show you. So this is 7 o'clock, right? So before 7, I would have marked the first presented fair value gap after 12 o'clock here, the purple one here that you see. This is the first presented fair value gap that I chose because it's taking buy side here, right? I chose that one. So also, that's the thing that I'll never miss there, that one. And then before 12, like tomorrow on a Tuesday, you know there's gonna be an after 12 again, right? So you're gonna always mark your initial Asian sell side as you see here. Why are we doing this? Because of I know that if we take out initial sell side and it still wants to go lower, where will it go? It will go lower as this. That's how you know your targets, right? So now we're still in the opening range. So, and the Nasdaq is moving like that. If you sold here, wow. So now it's going higher. We can anticipate this. Let's see before 10. Let's see. This is what we were taught. Ooh, we almost there, right? Just before 10. Yeah. The first 30 minutes of trading, we're gonna see it at least reach this. There's a 70% chance of that happening. Mm, 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 mm. Mm, 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 mm. It's going nicely. This is your regular hours trading opening range gap. I mean, so for those who haven't, like, I don't have a trading view here. Bam, 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 bam. I don't ha I didn't pay trading view. Some paid, so they have more options down here. So I don't. So, but that's done before 10 o'clock, 10 minutes before. Bam. So some of you are trading that, right? That's their trade. Probably they saw this as a false move. Liquidity was swept there. They're like, we're buying that. Then this could have been their move, right? But me, I'm not in. I'll never say I'm in when I'm not in. And I'll never call it if I'm not trading it. That's for real. But this here is the core, right, of this trading model. Because of it doesn't matter if we're going up or down, but this mechanism is still being used, even though we're going up or down, right? Suppose today is an up day, probably let's say the market goes somewhere, whatever goes there, it might come, take this out, take them out, and still go up. That's how it works, right? So here would be selling above here. It would go down and take maybe say these guys, and we're gonna buy it because if we are bullish, right, for the rest of the day, we will sell here and we will take everybody out going down, and we're gonna buy it here because we are bullish. But this mechanism here is still being used. Doesn't matter if we're buying or selling. You understand? Even if we're gonna go up, it's still gonna go build this, take initial sell side, take these guys out, and go up. So this is the NAS, the Nasdaq. So here, pretty small, taking sell side there. There's a fair value gap here, but I'm not counting that one. So this Could be, if I zoom in, okay, this one is taking on sell side there, but this is nice. This one has displacement, right? This fair value gap here, it's big and it's taking buy side there, right? So we could mark it as a best presented fair value gap, basically. I'm gonna change that now. Calc, change that. Change that. Mm, Still wanna bring it back first. Here. So what are you see me doing here? Some of you might be lost. I'm doing the everything that I do every day. This is the very thing that I do every day. I won't lie. It's the very thing that I do every day. Exactly what you see here. So we got this one. I was with you. We got it. We got this one. I was with you, right? Because that's how it works. And that's the thing I said. I was saying, really, this is how it works. If you learn everything, you're gonna see exactly how it works, and then you're gonna put it to use, right? Let's put this fair value gap correctly here. Let's zoom in. There's a nice volume imbalance there, so that's this. That's there. This is the first presented fair value gap. What's the date today? 13 April, right? April. There we go. There we go. So this could be a breakaway. So the market need not come back in here. Like literally, this could be a breakaway, breaking away from this retracement. This one here could be a breakaway, breaking away from this. See, this portion is still open from this candlestick's low to this one. So can still go higher, but we got this together. Okay. Want to do that thing again. Oh, okay. It's me. I was doing the wrong thing. That's fine. Let's see. There we go. Just nicely using all the levels, the octants and the quadrants. Quadrant here in black, the octants in pink. Hmm. You see 3 minute chart. Okay. Let's go to 5 minute chart. Okay. Promise guys, I'm gonna be live soon. I'm gonna be live. I know you wanna live. I'll fix that. Mm, You can see this is a breakaway. Let's just mark it. Let's see it as that. What's that thing? You see that? This is live. It's open market. So this is a breakaway. This one. We, so some portion of it is still open. From this candlestick's low to here, that's open. So that's nice, showing that this is a potential nice breakaway. And if you're gonna go above this high, I'm more likely to go here to this level there to make full closure. Okay. Gonna gravitate above to this, above this. Mhm. Go to the 15. Hmm. So above this, we have this nice old high there. Right, right. That's the 15. Let's just go to the hourly. See what we can get. In the hourly, the same there. Hmm. So this is all the things that you were gonna have, right? If you were trading. I'm gonna do two. I'm gonna do blue. So what you see marked there is the opening. Okay, we have a new high there up there. We're gonna move that line, but here's 930 there. So the lowest, we're gonna find the lowest between 930 and 10. So the lowest is this one. So this is the OR low for today. So this is 13 April opening range. This is opening range low, right? So this is it there. It's the high of the OR here. Okay. So now we have established the first 30 minutes of trading. This is a nice breakaway. So we're gonna wait up until probably half half past 10 here. That's like the first hour of trading. It's gonna be done. But basically, I call this one. I think I'm gonna be out because I'm not planning to trade anything. Yeah, close to this, which is the new week open gap high. Really, okay. Can still see more upside here. I see more upside. More upside. Let's see this. Can we get that level? Mm, 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 mm. What color do we want to make there? Red? Let's see. Yeah, there. This is nice high there. So if you gotta leave this, there's a nice buy side there. Buy side. Liquidity. I haven't written that in a long time. There's that there. Yeah, so let's see. Okay, that's that there. So, hmm, so nice. If we look up here, if you wanted to go long, probably it's a nice one because this one is a breakaway. The next one should be tradable. Getting long in there and going, taking something in there. Let's see. Hmm, just a little review here. We see that here, London, we go higher. Overall, it's a higher movement. In London, we open, we go down, not high. Okay, that's not an overnight run. Okay, we're good. Mm-hmm. This one, okay, let's do that. It's a tradable one. Nice one there. Let's make it pinky pinky. There's a tradable one. There we go. Mm. Okay, nice one. This one is tradable. Also, we have this one. Okay. Away. Tradable one. Bicep there. Normally, I put up like two screens, but I'll just do this for now. So, bicep there. What do we have in here? Nothing? Okay. Hmm. Hmm. There's also bicep there. Let's see though. Can we go there? Today? Let's see. I don't think so. Okay. So if we were to come into this, let me zoom in there and put it up there. If we were to come into this, that would be a long. If we were to go down, come in there, that's a long. Now stop could be right here. Somewhere there. Yeah. Now we go along there and then target there. And that would be a clean trade there. Right? That would be a clean, nice trade here. Let's see. There we go. It's coming back. We have this. Let's go. So we're still in the macro time from 9:50 to 10:10. We're still within the macro time. And also failure to get in here, that'd be a good signal, right? Let's see. We're coming in. Hmm. I'd like to see this hold and push higher, especially if I'm looking for this, right? Hmm. Okay, there we go. There we go. So we're just looking at this value gap. Hmm. The body's still okay. That's a beautiful reaction there. Beautiful reaction of this in here. Hmm. Let's go. Okay. So this other block, it's a filled high here above this one. So we can't really call it. Hmm. For me, there's like literally not a lot of things. Watching this one. Let's see. It's friends. What they're doing. So this is the 30. The 30. Okay. Here we see this nice fair value gap on the 30. It only had a wick. So now it has bodies. That's sufficient. Let me move this side. You see, this value gap only had a wick. Now it had now a body has been introduced, so it's sufficient enough to send the markets lower. Not that I'm calling a short, that is enough on a normal basis. Let's just return the. Mm, okay. Oh, here we just had full closure of the opening range, and then it's going lower like that. Okay. Makes sense that it breaches this here. Also because of it's a failed high, swing high. It's a failed swing high. Sell side there. Also, now we have a breaker. So, okay. Look at that. So it's the bodies here. If we zoom in here, let's do it. The bodies, you see the bodies? They're lower than these bodies. So it's a swing, the swing right here. The bodies tell the story, but the wicks will do the damage going above here. But the bodies, so because of, you can see how they are lower than these ones. So there's a swing low here. It's a swing, this is a swing high. This one is lower than this one. Even though you see this week's above like that. Because the bodies tell the story. Oh, that's cheating. Well, if you didn't learn, that's how it works. This should be inversion. We'd like to see the upper half respected, no bodies at all. Yeah, this should be inversion. No, should be inversion. This candlestick can't even put a body in there. That's beautiful. Like in terms of weakness, that's beautiful. Mm. Mm. Normally, this should change color to orange to show that it's now inverted, right? That's good. Now we're coming back into this, and we're below regular trading hours opening range gap, right? Now with this candlestick, if it closes below there, that can, oh, it just did. So it can allow marketplace to what? To go lower because we just closed below this. Mm, mm, mm. Just fix that, put it properly. So exactly what you see here is exactly how you'd find me looking at the marketplace. Everything I'm doing, I'd be dealing the same things, right? All I'm gonna have to consider is the quarterly shift, day of the week, in terms of the market profile. Those are things that I have to consider, right? And time, which time frame. So institutional entry drill, you know this one. You both know this one, right? I'm not gonna sell it, but it is a short position. It should not close here. Can it do it and maybe enter into another fair value gap in there up there? It can, but it should work into it. So this, right? Because you understand that as much as this is an institutional entry drill, it can get in the space and go higher if there was another fair value gap here just to get into it, right? So this would be your short position right there. And some would be say, what if it wants to come? Just put it there and get over it. Because you have an institutional entry drill there. The stop should be right here, basically, above the candlestick's height, that high, this one, that candlestick's height there. But because you're considering the fact that it can come into this once more, even though this has shown weakness already, I don't know why you should be scared. Because the proper first stop is this. Then second stop, we could just do this. And then if this is used, this, as soon as it just drops, you could just roll your stop. That would be your thing, right? And then this, not there, here, the sell side here, resting below this could be one of your short targets. But for a nice run, this would be this initial sell side. And in a nice day where we are like really, really bearish and everything you see here is exactly as you see it, then you stretch that out and this would be your profit that you were gonna target here, this low, the Asian sell side. Basically, I've shown you how I use what I've been taught here, exactly like this. You understand? If you follow through and I say some things you don't understand, go and watch ICT videos and then come back in here again. You're gonna see that everything he has taught us is and always been true. This is social trades, value at no cost. So it would go like that. That would be a shot. You saw that? That's a shot. Right in there, in here. That's a shot. In here, that would be your shot. Institutional entry drill. Can they close it, overrun it? Yes, it can happen. Is that what you're looking for if you're bearish? Not really. This could have been enough to send it lower. This one candlestick entering and stopping right there and then sending it lower. But this is still okay. It's permissible. Can do that. Right? It can do the very things that it's doing. Right? It can do that. So the stop is just above this candlestick, this one. Like literally above it, that's right there. And there's no problem about that. Right? If your stop is here, there's no problem about that. And just say stop loss. If that's your stop loss for this very entry here, that's no problem. Like literally, you have an order block here. It should be very hard to get over it. And currently, this is behaving nice. As you can see, nobody's on the upper half of what of this fair value gap, right? There's a bearish one. It's a bearish one actually. So okay, and explode like that. This is already accounted for in this case. So already accounted for. This will be your kind of a trade, right? Let's see. Okay. Hmm. See, does that hold? Like to see this like go lower, like current, like from where it is, large range candlesticks to the downside, especially after as soon as this one close, the next very candlestick should go down, like the very next one. This is enough. Just go in there. It's enough. It's enough. It's enough. Should start going lower now. Anticipate what large range, right? Candlesticks to the downside, right? This to the downside. There we go. You saw that. You saw it. And that's not AI. And this is how you set up the trade right there. You saw that? And then because you're selling in there, probably adding, right? So that's beautiful. That's beautiful. So for this one, if your stop was here, you've been out, right? But we also spoke about this scenario, and as you can see, it was already placed like that, the scenario. A scenario where we go above the swivel gap, because sometimes it can happen. So this scenario accounts for that. So this would be a stop loss where you don't account for this. I accounted for it. You saw it. So this guy could have been out. This one. So that's the lesson that we get, that this guy here is a loss. So we can move this guy out of the way because it's in video. No problem. Okay, still waiting. That's a sell. If you didn't sell, don't be scared, but this candlestick going like that. Don't be. Interesting here. Let's see. Now we're back above once more. Regular hours opening range gap. This is all this Fibonacci thing is it is, right? So it should go lower if it wants to go lower. This is enough for it to go lower. Needs nothing more. This is like enough, like literally enough to just send it lower. Okay. Look at that. It stops right there. That's interesting. Look at that. There. That's interesting. Let's go. Social trades, fail at no cost. So now we are about to have like the 30 minutes of trading. Or I mean, the first hour of trading is gonna be a complete now. There's 3 minutes left to that. Okay, let's zoom in. We're gonna see behavior here, in here. We'd like to see nobody's up here. We just saw one. Okay, let's see. Okay. The social traits. Okay. This is enough. If it wants to go lower, let it go. The make or break type of situation here. Because if it wants to go lower, it's enough. And thus, if you move that, you see this is missing this level. That's weakness. And this is also can't even take that. So let's see something. We're gonna take the fib. And then we're gonna see this candlestick. There we go. There we go. Can't reach the upper quadrant of this. That's also weakness. Okay. Okay. Just cleaning the fib. Okay, there we go. Bring this guy back so the clarity can come back. So this is sell. Like if I was selling, looking to sell, I'd select now here, right? Okay. Stop would have been above, just above. If I was a seller. Let's go. Okay. Okay. Don't come into this. That's interesting. Okay, the first hour of trading is done, guys. So basically we have the low of it of the first hour of trading there, and then the high of it there, up there. That's what we have. So I'm gonna just mark that there, just send it up there. Just wanna show you the first hour of trading. Okay, there we go. So I'm gonna just there, paste it up. So this here represents the first hour of trading. This is the first hour of trading here. Okay, so that would be a losser. Okay. Just gonna move this pink to the side a bit. What is the first hour of trading? This one. Yes, this one there. Gonna come back to it. Just gonna see here something. Can it go outside of the inversion? Yes, it can. So if your stop was just above that, that's a loss for that shot. Hmm. So knowing the opening range, the first hour of trading's range, dealing range, well, you know that above this high you can have a table soup sell, right? Mm, let's take that out. Okay, take you out. In video, no problem. This held. Mm, okay. This is very interesting. This fair value gap here is very interesting because the fair value gap here was used before taking buy side here. And this is a very interesting fair value gap. Okay, the lower of it is being hit here. And this is showing everything that we need to see from an inversion. There's width out of it. So let's wait a bit because it managed to close below above 50% of this range here. If probably just wicked like this, but closed below 50%, that's a short. So guys, basically this type of slow movement thing, it's a Monday thing without the news, or when the Fed are busy doing something. You know them. I'll see you on the next one. Mm, let's see. It hit the high there. There. Bam. Hmm. Literally, this is enough to send this thing lower. Yep, this is enough. Because it worked out of it, and now with this candlestick, it went above it but closed below 50% of this range. So that is bearish. If you value gap, doesn't use this one, uses this one. There. Nicely moving lower. Okay. We should see this one now. As soon as this is taken, we should see no bodies here on this one on the upper half. We should see them in here. A wick can get in there, but we don't want to see bodies in here. So here you're gonna sell. If we have another favorite cap, you're gonna sell it. Don't anticipate coming into this one here. It hits level there. If it tries to come in here, that's a shot. Put your stop right here. Yeah, this would be a shot there. Right? It will be a shot. And this will be a stop like that. This one has not been taken yet. Okay, let's go. But the nice thing is, if you can get, if we are weak on that day, getting something like this could mean so much. Because you're gonna go beyond this and reach this, and beyond that, and eventually reach there. Look at that. Look at that. Selling it in there and getting this. That's beautiful. Understand? And that's on a nice, very stay. Relatively quite lows. Have a look up here, in here. This is enough. I like to see it shatter now. This is enough. This is enough. Okay, we're waiting. But basically, that's social trades, and that how. Let's sell this one. So for some, this would be a protective stop, and then also be a full measure of a normal trade on a normal day, right? Can't even see. Oh my God, there. But see. Go in there. And recover that thing, the cell thing. Yep, there we go. Basically here, I'd like to see no bodies in here. Like, this is not what we wanted to see. When things like this happen, they tell you it's another day. I, I don't have anything on. See, I never press these two buttons, right? So that's good. Okay. Now we'll see this thing like tomorrow. Thank you guys. That's very okay.